Hi, this is Todd Baker, and I am a certified mortgage planner with Service First Mortgage. I live in Prosper, and my office is in Plano, so I am here locally. And I'm excited to show you today a completely different way of going about purchasing a home. What I teach my clients, and I do this in a team approach with Hina Patel, is how to actually save typically over $100,000 on the purchase price of a house, how to move your house into the forefront of creating financial independence, and then putting you on a path to get there that's guaranteed mathematically. So what I want to do is spend just a few minutes with you this morning. I want to show you a rent versus own analysis for this house at 426 Fairland. So what I did is this. I assumed rent of $1,500. I'm not sure what your rent is, but let's assume $1,500. And then I took an FHA loan with today's rate of 3 3/4. I plugged in some taxes and insurance. And so you have your principal, interest, taxes, and insurance for a payment of $1,761 to buy the house. Now, when you're looking at rent versus buying, the first thing everyone does is just compare the payments. And they say, oh, it's the same, or it's only a little bit more, so hey, it makes sense. And that's as far as it ever goes. The problem is that you can't compare a rent to a mortgage payment, because a mortgage payment, number one, is going to have a tax benefit. You get to deduct your interest and your property taxes. In this case, that's a minimum of about $272. Second thing is the very first month you're actually buying an asset. You're making a payment towards the principal to pay off the house. And the very first month it's $340, and that goes up every single month. So you have to compare apples to apples. You have to back these out, because you're not getting these benefits in rent, and you see your net cost is actually $1,148. Now, more importantly, look what it takes. $1,500 a month in rent is over $95,000 over the first 5 years. This right here is why homeowners are 34 times wealthier than renters. And it gets worse. Look what happens if you go on my freedom option. You have paid down $40,000 in principal. Instead of losing 95 grand, you actually have $40,000 in principal paid. And over 15, it's $334,000 in rent versus paying off $150. You practically have the house paid off using my plan. So rents inflate. Your house price never can, and in fact, it will go down. Let me show you how I get you to this savings. All right, so as a mortgage planner, this is my mortgage planning software. I took the traditional and the freedom, two columns here. And when I say freedom, what I teach my clients to do is this. I look at your overall budget. I make sure you have the right debt to income ratio, and then we structure a plan that says, okay, what if we take and we put 272 into the property? So let's say we take that tax benefit you're going to get, and either on an annual basis make one payment of 272 times 12 is, and you make one payment of about $32.64, or you just make $272 a month. You see it reduces the term by 20.5 years. Now, here's what happens. What happens is, if you look at the payment breakdown, that's $1045 a month. So if you take $1025, you multiply that by 120 months, that's $125,504. It's a big, big deal. It will change your life forever. So rather than getting stuck into a rent that always is going to go up 3% every year, you fix in these payment, and eventually you eliminate it. What also goes away, and this is an FHA loan, is $231 a month. This goes away after 5 years once the house is 78% loan to value. Another strategy, which I didn't demonstrate here, is if we take this $231 and put that back towards principal starting in year 5 or 6, for the same money, you'll now reduce another 5 or 6 years off this term. So this is what I can do for you. I can get you into a situation where you own real estate, maybe 2 or 3 pieces of real estate, using money you would spend on rent anyways, with the same exact payment that any other lender would present to you. There's some other strategies available too I can show you with. There are some to cut this cash to close down a little bit. If you asking the seller to help pay for some of that, rather than getting a lower price, if in your offer maybe the seller will be willing to pay, that's something you can ask for at least. But in the meantime, if you like this approach, give me a call. I'd love to help you, and I hope you have a great day.